As a natural transition from a review of pay statements, employee benefits, and term life insurance, we should also review short-term and long-term disability insurance coverage, covering a risk that's much more likely than premature death. To prepare for this lesson, I reviewed group and individual disability policies from most of the big players, including Guardian, Lincoln, MassMutual, MetLife, Principal, Prudential, Northwestern Mutual, and Unum. But just for fun, I will use my own long-term disability insurance policy for this lesson's examples. Simply put, disability insurance is designed to replace a portion of a worker's income if they become disabled due to an illness, pregnancy, or accidental injury. When you hear short-term and long-term, that refers to the maximum coverage period, also called the benefit period, which is the maximum amount of time someone can collect disability benefits. Short-term policies may have a maximum coverage period of 3 to 6 months, with benefits beginning after an elimination period of typically 7, 14, or 30 days. This elimination period, also called a waiting period, is what I frame as a time equivalent deductible. How much time must pass before a disabled worker can collect benefits? This period of self-funding should be regarded as part of your emergency fund, and since the coverage itself is often limited to only 6 months, you may consider waiving voluntary short-term coverage if you have healthy savings to support your household. If you are currently working, assuming you ran out of paid sick time, could you go without a paycheck for a handful of months? When the short-term disability coverage ends, the long-term disability policy usually picks up the following month. Although short-term disability benefits may not last longer than a few months, long-term policies usually have benefit periods through age 65, Social Security full retirement age 67, and 70 if the disability lasts that long. Long-term policies typically have elimination periods of 60, 90, or 100 days, which is between 2 to 6 months, but some policies include waiting periods for up to 1 to 2 years. Longer elimination periods reduce the policy's premium cost, and vice versa. For my policy, I chose an elimination period of 180 days, since we can manage to self-fund 6 months of total disability. My policy's maximum benefit period is until age 65, and my premiums would be waived once disability benefits are claimed. As I mentioned, disability insurance is designed to replace a portion, but not all of a worker's income. Most group disability policies provide monthly benefits between 50% and 2/3 of your pre-disability income, but also with a monthly maximum benefit for higher earners, often $10,000 per month for core policies, with the option to buy up larger benefit amounts at favorable group rates. Those higher benefit amounts often require additional evidence of insurability measures, including a blood profile, urinalysis, and medical exam. Keep in mind that disability benefits may be coordinated, meaning they can be integrated with other income sources, including Social Security, workers' compensation, state government programs, salary continuance, and sick leave. Also be aware of various exceptions and limitations on disability policies, including benefits limited to 2 years if the disability is due to nervous and mental conditions, unless under the regular care of an approved practitioner and confined in a hospital or institution specializing in its treatment. Benefits are also limited if the disability is due to alcohol, drug, or substance abuse. There are also exclusions, including disability due to self-inflicted injuries, an act of war, or occurring while committing a felony or misdemeanor. Insurance companies use these exceptions and exclusions to protect themselves from adverse selection, meaning people at higher risks are more likely to apply for insurance coverage than those at lower risks, resulting in higher overall claim costs for the insurance company. When reviewing your disability insurance, it is crucial to recognize if your policy includes an own occupation definition of disability, which means benefits are paid when you cannot perform the main duties of your regular occupation and can't earn a certain percentage of your pre-disability earnings. Most group disability policies through an employer provide benefits using the own occupation definition for only up to 2 years, then switch to a much stricter any occupation definition, meaning monthly benefits are only paid if you're unable to earn a percentage of your pre-disability earnings at any gainful occupation, taking your training, education, and experience into account. This is one of the reasons that group disability policies are much cheaper. Beyond the base disability coverage, the insurance industry is known for its assortment of confusing riders and optional benefits. Some bells and whistles may be more valuable than others, depending on your other financial planning considerations. As an example, my monthly disability benefit would be $5,000 per month until age 65. But since we can imagine the long-term impact of inflation, this policy includes a cost of living adjustment once the disability benefits begin. This policy also includes an automatic benefit increase rider, increasing the coverage amount by 3% annually in the first 5 years of the policy. And a benefit increase rider provides an opportunity to apply for increased benefits in the future without proof of good health. We also see an extended partial disability benefits rider, providing disability income if I am not totally disabled but can't continue at least 85% of my work duties with a loss of income. And here's the own occupation rider that we saw before, ensuring I'll receive benefits based on my ability to continue doing my current job. Although these multiple riders can provide valuable add-ons, be aware that they also add up in price. In this example, increasing my annual premium by 66% versus the base coverage. Here are my available premium frequencies, paid monthly, quarterly, semi-annually, or annually. Paying monthly for my policy would increase its annual cost by nearly 4%, and since this is a participating policy, eligible for dividends after its 5th anniversary, my future premiums may be reduced. A detailed policy also includes an annual premium summary showing my level premium, which is non-cancelable by the insurance company through age 65. However, I hope not to keep the policy for that long, only until the risk of disability would no longer cause a financial burden for our family. As mentioned during the pay statement and employee benefits lessons, it may be worth paying the disability insurance premiums with after-tax funds so that future disability benefits would be received income tax-free. On this helpful coverage page, we see the total disability coverage in various riders, the 6-month elimination period, the maximum benefit period to age 65, and the occupational class, which is labeled based on potential exposure to various risks and hazards on the job. 4A involving the lowest degree of risk, since I'm a financial educator that doesn't do a lot of skydiving. I encourage you to start by reviewing any group coverage you may have through employee benefits, including voluntary buy-up options. If you find you need additional coverage or better disability definitions with an individual private policy, you can reach out to an independent insurance broker. I've included links to some unaffiliated options below. Thank you so much for continuing to watch the insurance videos. It's not necessarily fun to discuss or pay for, but risk management is the backbone of a successful financial plan.